Good afternoon, everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's position disclosure. I've been slowly getting out of some positions, some at gains, some at losses. Um, but sizing down a little bit, which I've been working on sizing down for a while. Haven't been doing a good job of it, but I've been working on sizing down. P&L swings got really crazy there for a while, so trying to bring it back down to earth a bit. All right, so an interesting day today because most stocks got smoked, but the S&P is not down, and this is just this classic market. I don't even know what else to say about it. This classic dispersion. So the equal weighted S&P finished down 0.75%. It's a real number. It's a real number. But the SPY finished flat. It's a huge difference. It's a huge spread between the equal weighted S&P and the actual S&P. 0.75% versus flat. The Qs are up 0.25% on the day. The QQQE, the equal weighted, is down 1.5%. And it's a nasty looking daily candle on top of it. Um, wow, that's even more than I thought it was. I didn't realize it was that big. But it's today. It's like, where did we rotate the money into today that holds the market up? And the answer is AI, Nvidia. Nvidia just absolutely crushed it, up 5% on the day. Day two continuation of yesterday's breakout. Even performed even better today than it did yesterday. It got a price target increase this morning, so it went up 5%. But I'll tell you, I really feel like Nvidia is up as much as it is because the equal weighted S&P, the equal weighted Nasdaq is down as much as it is, almost more than anything else. It's just how this market seems to operate these days. We just have to be prepared for it. On the index level today, it was extraordinarily flat and boring. Like extraordinary flat and boring. A tiny little bit of a downside grind for the S&P. Qs pretty much same deal, gapped up a little bit, kind of grinded lower throughout the most of the trading session. Incredibly boring at the index level, but not at the individual stock level. That's what happens with dispersion sometimes. The market's not doing anything, but Nvidia's running up 5%. Names are moving really big, and there's been individual trading opportunity. Continuation of the breakouts from yesterday. Paid if anybody was involved in those. Coin short was like my best day trade of the day, I guess. Um, we talked in the morning meeting like above 367, you could look for a signal to get heavy, or kind of build in maybe a little bit. So I actually started to build in short on the way up, real small at 364, added 366, added 368, just kind of building in real small. Was looking for like an actual technical signal to short off of. I didn't really get it, but I had enough stock to pay me just off the upside extension. Really just caught the move back down to like, I don't remember, 354 or something like that. 352 maybe. Um, so that was an okay trade on that like big day two higher, huge extension there after in some ways you can argue it's more than a day two, but you had these two rest days in here that kind of made it a day two. So, um, sorry, I gotta fix this. So again, just individual stock opportunity with different names rocking and rolling. Circle turned into a good 2 day trade. I liquidated my position, um, basically a bit below 200. So that thing paid. We knew it was a good day. It was just with the timing. And I actually took a really big loss on this initially on the way up on this day. I got out at 240. And then on my flight, I reshorted some real small at like, I don't remember, 275 or something. And then yesterday, I was able to be a little bit more aggressive with it and finally make a few dollars. But that circle finally broke. Same deal, just insane upside extension on a recent IPO. The um, the market cap for Circle was almost as much as the market cap at Coin. at highs, which makes absolutely no sense at all. Especially when we uncovered that like half of Circle's revenue or something like that actually goes to coin, made no sense at all. But it's just market. I would argue that CoreWeave doesn't belong anywhere near these like 180, 190 prices. I don't necessarily think it's a bad company. It's just these recent IPOs have just been insane, and this one also broke a little bit. 160 is a huge level. I got out of my CoreWeave into the close. Um, I think Pat's keeping a little bit. We got out of that short into close as well. 160 is a huge level. If it really can get below and hold below that 160, there's more support in the low 140s, but I'd be very surprised if we don't see this thing trading between 110 and 115 at some point in the near future. It's just that, you know, I don't know, this market's just crazy. So hard to have too aggressive of a game plan, but a lot of these stocks don't belong there. I still have a little bit of ARC. That was a new position yesterday. I started as a feeler today. We talked in the morning meeting about how today could be like a day three RDR. So I sized up a little bit in ARC today, made a few bucks in it. That was a good one too. So just just sniping a few dollars for myself in some of these names right now. And that's pretty much it. Tesla's weakness was extraordinarily notable. Just pummeled this name back through the 333 area. I had gotten myself stopped out at 333. I re-entered yesterday around 350. Covered a lot into the down move. I do still have some on as well for Tesla. But this market just looks super strong. I think that we're going to have a decently large pension rebalance, which will be a sell into the end of the month. So that may weigh on the market a little bit between now and through Monday. But once we go into July, I don't see what can make this market go down in July. The bid that's going to come from vol control, we're estimating right now over the course of the month is going to be like $115 billion. It's going to be like $5-6 billion a day for the entire month. It's just the next leg of the repositioning into the up move. Markets work in feedback cycles, and that's how it is. We unwound a tremendous amount of systematic positioning in the March April period, and trade wars and actual wars and everything else can be damned because all that matters is are the systematics turning their bid back on or not? And it's been one buyer passing the baton to the next, and it looks like unless something major happens pretty soon, when we get into July, things will probably continue to be very strong. So that's just where we're at. S&P's a hair away from all-time highs. Nasdaq made all-time highs yesterday. The QQQ ETF itself made new all-time highs today. So that's it. It's an incredibly strong market, and I think that the game plan just has to be buy the breakouts, buy the dips, buy the trend continuation, take all those trades, and just be a little bit cautious when we get too extended to the upside. Kind of the normal bull market playbook that we got so used to for some years, last couple years, really, until this March April tariff fail thing occurred. But so we'll continue to buy those breakouts and look for continuation until something changes. And I think something could change in August, September. I'm not like a really big picture bull, but I'm certainly like a shorter, medium term picture bull right now. And if things do change in August, September, the technicals will be sure to show us. So that is all I got. I'm happy to answer any questions. From David, regarding the ADMA catch-up trade setup, how much of a percentage of a gap up or down do you normally look at before you consider that setup? I don't have a rule for that. To be honest, it's more about I just want the gap to be large, and I want it to be based on usually like a significant news event, like an news report, maybe an upgrade or downgrade. But that's kind of what's most important to me. It's got to be big enough that it can have a long enough of a corrective period to be able to create the setup itself. Um, if it's a small gap, then you can't really get that deeper price correction into the ADMA as that catches up to create the pivot point. So don't really have a specific percentage amount that I'm looking for. It can also potentially be too big sometimes. Also, if you're looking at like a 30+% gap, you get so much extension there that it might just take the trade off the table. But I hope that helps a little bit. sure. What else, guys? Anything else? From Gabriel, Disney's a name to keep on the watch list for the July period. This is Gabriel on YouTube. Disney looks great. I don't like trading the stock. I've always found it a difficult name to trade, but Disney looks fantastic above 1950. Yeah, it's big resistance here on the weekly too for continuation. Looks real good. From Scott, what time frame are you looking to use on your stop loss? Can you share an example? Um, it depends on so the stop loss that I'm using for a trade, if I'm using a stop loss, because I don't always, is going to be based on the time frame of the trade itself, typically. So sometimes if I'm just taking a trade that's based on a 5-minute chart, I'm using a 5-minute chart stop loss. Sometimes I'm taking something that's on a daily chart, and I'm using a daily chart stop loss. So it really depends. I think that the daily chart's the most important chart. I like to trade in the direction of the daily, even if I'm just trading on a 5-minute chart. But that doesn't mean I can't use a 5-minute chart stop if I'm trading on a 5-minute chart. So that's how I'm going to do it if I'm using the stop. I do a lot of like building in and building out of positions, so I don't necessarily have like one hard stop loss for a full trade a lot of the times. Um, like the ARC trade I got in yesterday as an example, I didn't have a hard stop loss on it, and I added against me into the gap up this morning, and that was just kind of the trade there, and I still have a little bit. I hope that helps. Yeah, Micron. I mean, the Micron earnings report was phenomenal. The numbers look great. Crushed EPS, crushed revenue, guided significantly higher. They absolutely demolished their guidance. That was the type of earnings report this thing needed in order to be able to move higher. The stock has just been going straight up into the report over the course of just this month. $95 to $128 straight up. It's an insane move for a company like this. And then reported that. So there's no reason to think it's going to be done anytime soon. Maybe we get like an acceleration off the earnings report that gets us up to 148 by Thursday, or tomorrow's Thursday, by Friday or Monday, and we could be shorting versus 150 on like a massive parabolic upside move. But the stock looks phenomenal, and the report was phenomenal. All right, folks, I got to take off, so I will wrap it up there. Since it looks like I got through the questions. Have a wonderful evening, and I will see you all tomorrow.